A very warm welcome. Today we have with us Mr. Sundar Krishnan. He is a thoughtful industry leader, and today we have with him to discuss more onto the industry of insurance. A very warm welcome, sir. Thank you for sharing your time with us at CXOTV.
Thank you.
Thank you, sir. It's a pleasure. It's a pleasure to have you at the platform. So, before we talk about the entire insurance industry and its dynamic landscape in current scenario, we would love to know, something about you. If you can briefly introduce yourself and, talk about your journey so far in the industry for our CXOTV audience, that would be great, sir.
Sure. I'm Chief Risk Officer of Reliance Life Insurance from 2006 onwards. This has been a long journey. Before that, I used to be in the banks. Used to work for Merrill Lynch. Then I used to work for ING Life, ING, Vaishya, actually, entire group.
Okay.
And then before that, I used to be with Middle East, in the Middle East, as a consultant, a technology consultant. And prior to that, I was with Credit Lyonnais, which is a French bank, as head of risk and compliance and audit, very similar role. And prior to that, I was with Standard Chartered in Middle East and South Asia as an information systems auditor, reporting on to group audit in London. And prior to that, I was with Indonesian bank called Bank International Indonesia, and very similar role again. And prior to that, I was with Ernst & Young for India, essentially a banking consultant and cyber security consultant. I also, apart from being chartered accountant, have a cyber security degree called CISA, Certified Information Systems Audit. And also I've done a course in Manila on risk management, enterprise risk management, Asian Institute of Management. And I've been part of Bombay Chartered Accountants, Institute of Chartered Accountants. I have been part of Bombay Chartered Accountants for internal audit as board of advisors. I've also been part of the executive body of IIB, which is our industry body of insurance. Also, I was part of the advisory committee of IRDAI, the regulator for investments and financial accounts. And then prior to that, before Ernst & Young, I was practicing as chartered accountant for 3-4 years. And then prior to that, I was with Deloitte. So I've experience from 1984 in our country as well as 12 other countries or 14 other countries. And essentially in the BFSI space, banking, mutual fund, and insurance. And also a technology person because I've had a technology experience. And essentially in the line of information security and information technology risk management.
Yeah. Thank you, sir. I mean, it has been an extensive and indeed a wonderful journey that you have shared with us, and with your years of experience and decades. We would love to talk about the industry and how its current landscape is. So when we talk about this insurance industry, which operates in a very dynamic risk landscape, so how do you perceive this evolving nature of risk, and what strategies does your organization actually employ to adapt to these changes?
The industry is going through several changes, and some of these changes are very strategic. And one of the pivotal changes is the regulatory space. There are sweeping regulatory changes. Now, we used to have many products that we need to actually file with IRD, wait for their approval, and then launch. But now you can launch yourself and then file it. It's called use and file instead of file and use. Similarly, even in the distribution space, the corporate agent can tie up with many insurance companies, and brokers are always allowed to tie up with many insurance companies. There are several relaxations in the investments area which have been done. And there are several more changes in the offering. I mean, there is a change in solvency regulation, just going to be a change in risk-based capital. Currently, we need to keep 150% solvency, whereas in future, it will be risk-based. So instead of a factor-based approach, to be more strategic, more scientific. And there are also going to be changes in the earlier commissions we used to have highly regulated. And so the market practices were to give a lot of support to the distributors. That resulted in a lot of issues in terms of accounting, in terms of taxation. Now it's all liberalized. It's left to the board to decide how much to be paid. So it is more liberalized in that sense. And there is also better use of technology now. But there are also cybersecurity norms that have changed.
Right.
The privacy regulations have come. And the expense of management limit is what we need to adhere now as our overall limit for spending. So it's a more liberal field, more self-regulated, more principle-based regulation, less of rules. But rules still are there a lot. And I think regulators looking at making all this rule-based regulation to principle-based regulation and harmonize India to international world. And the Indian insurance company will be like an international insurance company. Maybe 5 years down the line or 4 years down the line. There will be IFRS also, which is also there in projects now, IFRS 17. So there are several changes that have happened in the regulatory world, which has resulted in changes in the business, changes in the landscape, changes in the technology area, changes in the way things are done. There is a lot more pressure on insurance companies to meet customer needs. More transparency is required to deal with customers. More products are required. We need to use artificial intelligence analytics. And we also have to sell mass products like Prime Minister's Jeevan Jyoti Bima Yojana. Now there is some Bima Vahak that has come. These are mass-based products which have very little profit margin but a lot of pull. So we have to include a lot of poor people and also others, in the arena. All this changes the risk landscape very drastically. And these changes would bring in, you have to ease customer into onboarding. You have to take lots of initiatives in the death and maturity settlements faster. Also, you have to reduce the repetition rate. Today, our payment rate is 98.5, 99 yearly. So that's the kind of reputation rate is just 1.5 for the frauds, which means, you have to take care of a fraud situation much before I'm using predictive analytics and predictive modeling. So there is a considerable shift in the way business is done because of the changes in the regulation, and there are more changes in the regulation now. So the entire distribution network is changing. There's a lot more urgency and requirement to recruit more agents, recruit lots of employees who are well trained in selling insurance, usage of lots of intermediaries and various models we have talked about. Lot more changes are going to come. There are also talk of composite licensing, which means one company can sell health insurance general altogether. Maybe in 2024 or 25. And then there is also stress on employee-based selling now, because if agents are not available, you have to use direct sales. And you have to improve the client experience, etc., because there is pressure on companies to less and less repudiate policies. There is also pressure on using referral models to distribute you databases, and then you can buy the database. But now privacy regulations have come. So you have to take care of the privacy regulations. There is also product solutioning. Tie-up with banks have increased now. Corporate agents and banks can tie up with more insurance companies.
Right.
On using video-based underwriting. Your ECG, video-based, everything, database selling, everything can happen real time now. Databases are used real time. You have KPIs for operational people. There's a lot of change in the emerging landscape in terms of usage of database providers, platforms, financial inclusion. I don't know whether today you would have read in the newspaper about banks trying to tie up with income tax that they can assess income tax. So even insurance companies would tie up with all these agencies and seek exemption from privacy board. Because at the end of the day, it is an industry initiative.
Absolutely.
There is a lot of changes in the industrial nature. Distribution, customer, vendor, employee onboarding is faster. There is a lot of reviews that are done. Cyber security is changing. And so strategy to tackle all these will be, to have distribution norms. You use new models, use online database, use analytics, use predictive modeling, find out who's going to die, who's going to have persistency issue, who's going to surrender. Use operational reforms, use database checks, digital checks, use digital transformation. If you see, Reliance is also indulged in digital transformation, so everything would be digitalized. There is also spread of long-term remuneration, because you have to reward the agents, and insurance company makes profit on a regular insurance policy only after 7 years, which means you have to pay the agent or the broker a long-term nature. So there is a lot of stress on changing the way remuneration is paid to agents. And there is there is left to the boards of the insurance companies now within the UIM limits. Then there is the use of online models, there is the use of fraud registry, use of derivatives. Currently, we are allowed derivatives only interest rate derivatives. But there is pressure on regulator to liberalize more, use equity derivatives also. There is also investment regulations, dashboards of KRS, etc., etc. So there are a lot of new strategies on board to tackle the changing risk landscape, and there are a lot of changes. In the next 5 years, I'm going to see lots of changes.
Absolutely. I think, you have majorly talked about the key highlight points. And, when you talked about it, let me put forward in that way when it comes to technological advancement that you had mentioned initially. So we are able to see that with this rise of insurtech and technological advancement, how do you think exactly is this insurance sector leveraging innovation to actually manage risk and enhance the business operation? Could you share some highlight on this aspect?
Sure. So, we actually use SaaS-based analytics. Now, what we do is we try and predict which customer will pay the premiums after 7 years, 8 years, 5 years. Which customer is lesser of claim risk, in terms of claim risk management. And so we have launched these analytics way back in 2013-14. Now we have a very good experience. And so we use lots of algorithms to find out we do a lot of predictive modeling to predict. And so we save a lot of money in terms of blocking such wrong customers beforehand. And as a result, for the right customer, we are able to give speedier justice. We are able to do video-based selling, audio-based selling. We are able to do Aadhaar authentication, PAN authentication instantly. And therefore, the policy issuance is faster in terms of the database screening that we have done. And as a result, the risks are lesser. So industry today, all companies have embarked on digital transformation so that they digitalize the issuance of policies. You don't have, paper-based forms to be filled up and signed. Instead, everything is handled through email and digitally. And there is a lot of data orientation now. And if you are a known customer, the checks are already done in terms of PAN, Aadhaar. All that you have to do is give a okay or acknowledge that the agent insurance company can use the database that they already have. And this sets approvals from you. Like I bought a policy yesterday, I had to do through something like 4 or 5 authentications. Every time I would get an OTP, I had to put the OTP. But the idea is that, but the whole thing was done in 5-10 minutes fast. Idea is that all these 4 checks were done instantly and my digital consent was sought. And it was very friendly, user-friendly. So like bit of changes in which way in which products are sold, the processes are there and technology is automated today. Signature verifications are done using analytics and online systems. There is a lot of customer centricity now in terms of, single view of the customer is sought. The customer's bank account, customer's background, customer's designation, everything is sought. And there is a lot of usage of analytics and artificial intelligence to find out about customer, find out or predict about the customer's behavior, do surveillance and fraud prevention, etc., etc.
All right. So
we're using technology in a big way now.
Right. So, all right, we'll definitely talk about, as you mentioned about customer-centric experience, which is very much important, and the data analytics as well. But a while back, you did mention about, the regulatory compliance that is constantly evolving. So, in this insurance sector or the industry, which is heavily regulated one, what do you think are some of the key challenges as well as the opportunities in terms of navigating the regulatory landscape, and how do you think that your organization is actually staying compliant while fostering such kind of innovations?
The challenges and opportunities, the challenges are, there's a lot of curbs on costs. So there is an expense of management limit, which you have to adhere. And no way you can breach this limit. Because if you breach it, there are so many repercussions of that. Even it can tarnish the reputation. So you just adhere by the regulations now. In fact, last 5 or 6 years or last 7 years, we haven't had a single regulatory breach or a deviation. We haven't even got a warning, forget the penalty. So that's the kind of stress on regulatory compliance. We have to be compliant in spirit, and there is no even transaction. So if it's a black, we don't do it. And if it's a gray also, we don't do. We do only white. So that's the kind of restrictions that are there. And industry is rightfully regulatory restricted. Because, at the end of the day, you're protecting customers' money for 30 years, 40 years, 10 years, 20 years, depending on the size and term of the policy.
Correct.
And therefore, the solvency requirement is very strict. And cultural change is required when you come into the industry. And everything has to be digitalized, onboarded, validated. And there are a lot of opportunities, actually. The opportunities are digitization, real-time onboarding checks on customers, employees, vendors, use of analytics to adopt predictive modeling. Again, persistency is ensured by tracking the customer's background, profile, etc. So, how does organizations stay compliant in the process? We have to give innovation a strong yes. We have to give culture a strong yes. So the employee, the vendor, and the stakeholders have to be culturalized to the industry. I say the regulatory compliance is a must, and there is no doubt about it. There is no opinion that can be sought, and it has to be done. It has to be done beforehand. And so there is a lot of prioritization on automation, and compliance has to be automated. We actually use lots of softwares for insider trading, uses software, AML KYC, use some other software. And so every compliance aspect is automated. Even reporting is automated. And we ensure that, there is strict compliance.
I think that's very much required. As you mentioned, it's the customer's money, and that needs to be put into a secured way. And at the same time, when you talked about digital transformation, I think the entire process on this shift has actually eased down in terms of onboarding of new customers and the existing customers' requirement. So moving ahead, when we talk about this data analytics, which actually plays a very crucial role in this risk assessment. So how do you exactly think that this insurance organizations utilize these data analytics in predicting and predictive modeling, in fact, to enhance this risk management and underwriting the process around it?
Actually, 2014, the claims head used to report to me. So I to adding claims because the claims head used to report to me. And I used to get lots of dead man insurance. Then we used to get sick man insurance, the people with cancer being insured. We also had above age insurance. People with 80s and 70 years would be shown as 55, 45 in the photographs. They show the earlier photographs. And we had several problems. And the actual was very bad. The actual is what the actual death is. An estimate is what the estimated death is. So some cases, the actual death was 120%, some cases 140%, some cases 180%. In some regions, it was 190, 200, 300. And so we had a problem in claims. And more claims means it's losses for the company. From that situation, we used analytics in a very big way. We used to predict from where the claim would come. This is based on occupation. This is based on age. This is based on sex. This is based on where the region is. It is sold. This is based on salesman's behavior. And so when I was the head, I used to have, by intuition, I used to get speak about 8 or 10 parameters. Then when I used SAS analytics, that got turned into 36 parameters. We had combos in those parameters. And by the help of these analytics, or by even intuition initially, I used to investigate, I used to spend about 40-50 lakhs additionally and save about 40 crores of claims. That's the kind of turnaround, in terms of the savings that we get. And today we are a leader in anti-claims. We have very little early claims now. From what it was 35% in 2014, we have reached to 10% or less than 10 today in 2024. It's been a long journey using analytics, finding out what are the bad areas and cutting down that. This was claims. Then similarly, persistency, we use predictive modeling, finding out who will pay the premium 5 years later, 7 years later, 8 years later. Similarly, we used to have also in complaints, analytics, find out which customer can complain, who cannot. Using all the analytics, and you're able to decide beforehand in terms of predictive modeling what would happen. And then you actually monitor the actual. And to go after the bad areas and rectify them, and then ensure that, your risk assessments are perfect, and your risk assessments actually help you to manage the risk.
Indeed, I think what you mentioned, data analytics has played a huge role in that. I think it has actually created that shift and the change that required. So, when we talk about the insurance organization, it is very important that there is a balance in terms of the need for a robust risk management as well as providing a seamless, customer-centric experience, which you were mentioning priorly. So, what measures are in place to ensure that the customer trust and satisfaction is maintained? Because after all, it's the customer's money, it is concerned. So, how do you maintain that?
When you eliminate wrong customers when you onboard, the right customers are served faster and seamlessly. So we we used to issue say policies in 15 days or a month. Now we are able to issue policies instantly because you have the TAN and you have the other authentication, etc. Real time. What happens is the good customers are onboarded seamlessly. So whenever we engage in any technology change or any changes in the risk management sphere, you keep customer in mind, and you always do a new process review or a new product review or a new technology review. When you do a review, you actually have to see, you have to do sample review, and you have to also do backtesting to check what happened to the customer, how did we better serve the customer, etc. So there are a lot of KPIs, which is key performance indicators. There are turnaround time stats, which we monitor. And we also have a ISO for this process for this, wherein we actually document all these processes as well and find out what are the risks. And somebody independently reviews all this before implementing any new process or new technology. So by using analytics and artificial intelligence, we are able to provide the predictive intelligence so that good customers would be provided seamless experience.
All right. In especially in this insurance sector, we often see collaboration with various stakeholders. So, can you share some insights into how insurance organizations are actually collaborating with other industry players to collectively address emerging risks?
This is a very important statement because many times the claims a fraudster typically attacks 3 or 4 companies, and if companies share data, then you typically find out where the problem is. And when I experienced what I experienced in 14 about claims, about locations, I found peers also giving me the same locations. And so we have a lot of meetings of the industry, and we have also there is a body called IIB in Hyderabad, which actually gets the data of all the insurance companies. And they gave us lots of suspicious, and we are able to access that database and find out what are the suspicious claims, suspicious persistency issues that we can get before that. And as a result, we are able to take steps to ensure the frauds are cut. I don't know whether you are aware, as per Section 45 of the Insurance Act, we are given only 3 years time to detect, review fraudsters and prevent. You cannot cancel a policy after 3 years. Only you could do that before 3 years only if there is a fraud and a proven fraud. The proven fraud is get only when you get data and when you run analytics. So industry comes together and helps each other so that they we help each other to find out fraudulent claims, frauds. We also share fraud histories, case studies, so that others learn. And we also share data on how do we use various systems. And we also find out from others how they use what systems and learn from each other. So it is a very consultative process, and industry has actually benefited. I could also give submissions to the board how much I have saved by joining with the industry in terms of frauds.
Right. So, when we talk about the future of the insurance sector, what do you think in terms of the technology? So, what are the major top focus areas and priorities over the next 2 to 3 years to come by?
So one would be, of course, cybersecurity norms are being tightened. There is also a privacy regulation that has come. So I'll have to invest in technologies to ensure the compliance with privacy of customers, employees, and vendors whom we need. I will also have to implement IFRS 17. So there is a big project that's going on to implement IFRS 17. IFRS 17 is all about transparency and the valuations, market-based valuations of assets and liabilities. We also have to do NPR, a new process review, new technology review, and new product review before every product or a process or a system is implemented. And when we do that, we actually look at what happens to the customer whether customers' views taken, how do we deal with the customer, how do we treat them. We also have to have a fraud registry, wherein all the frauds in the industry are known beforehand, and then we prevent the crime, as I told you, within 3 years. And then there is outsourcing and third-party review. Industry actually does a lot of outsourcing. Every big company would have at least 200 to 300 vendors or outsourcing service providers. So we'll have to do a very effective third-party risk management, and that is something done annually. Also, we have to do and make these submissions to board in terms of review of the service providers, background screening checks of those service providers beforehand. So this would be the focus areas actually.
So now, what is your outlook in terms of the future of the insurance industry, and what do you think the technologies which will actually play a crucial role for the growth of this sector?
I think the industry is going through several changes, especially regulatory changes. And all the regulatory changes are aimed to harmonize Indian insurance industry to the international world, so that we look like any international insurance company. And there is a lot of stress on process, people, and technology today. And the outlook for the insurance industry is that the penetration, which is 3%, will grow to about 6% in 5 years. So, which means we are seeing doubling of the industry in 5 years' time. And the next 5 years, you're seeing several changes, distribution norms, in tying up norms in terms of risk-based capital, solvency norm, analytics, into artificial intelligence, instant real-time onboarding of customers, video enablement, underwriting is done over the video, ECG is taken over the video, and there is a lot of cyber security, privacy, compliance, and delivery of services to customers instantly with seamlessly and with quality. A lot of stress on quality. So I think technology and transparency would be backbone of the changes in the next 5 years. And without a company, without being technologically advanced and being transparent, cannot progress. That's the underlying statement.
Absolutely. I think with the amount of transformation in terms of the digital technological adoption that we are seeing, businesses cannot avoid themselves to taking and considering this digital transformation initiatives. That is again a very important part of it. So thank you, sir. With this, we have come to the end of this wonderful interaction that we had. Thank you for sharing your years of experience and your valuable insights with our CXOTV audience. Thank you once again for joining.
Thank you, CXO.
Thank you.
For more updates from CXO TV, please like and subscribe to our channel.